Okay, guys. So today, uh, according to what I said in the group chat, that today I'm going to show us how to trade 5 minute expiry time. Even if you think that 1 minute expiry time is too fast, or maybe it's it's not easy to trade 1 minute, I think 5 minutes is still better. 5 minute expiry time using 1 minute candle. So, what I want to teach you about today's topic is, uh, you know, in some cases, whereby you are trading, by the time you started trading, even if it's not from me, someone you might have heard from someone who teaches about candlestick patterns like bullish engulfing, bearish engulfing, like hammer candlestick, pin bar. You know, there are times that we usually say that all these candlestick patterns are some are a reversal pattern and some are continuation pattern. But eventually, when it comes to live trade and you are trying to see all these patterns in the chart, you try to do what we have been told, that if bullish engulfing pattern is a reversal sign at the support level, you try to do it, and unfortunately, you do it and you lost. Probably there might be some things that it is not yet known to you that why you lost such trade. And some of these patterns, I'm going to use that how you will enter a trade with 5 minutes candlestick, 5 minutes expiry time, and also 1 minute candlestick. Okay, so and this is all these patterns like chart patterns like head and shoulder pattern, double top pattern, ascending triangle, descending triangle, uh, bullish flag, bearish flag. See all these patterns. There's no specific rules that they are assigned to be reversal or continuation. If all this pattern, let's say a bullish candlestick now, a bullish trend is forming. You know what we mean by bullish trend? When market is moving up and down. Okay, let me change it. When market is moving up down, this is what we call bullish pattern, bullish trend. But when you see like something like a head and shoulder pattern, oh, this is first shoulder, this is the head, this is the second shoulder, then you expect the market to go down. But what happened? The market still continue going up. So that is why I said there's no specific rules. Okay, I think someone is demanding the the login details. Okay, let me do that. Okay, okay. So what I'm saying is that anytime, whenever you see this pattern, oh, some people think, oh, the next trend should be down, but why the market still going up? That is why we trader, we always lose money in trading because we always think, or we always go, or we only follow the what people said, but what not we don't follow what we find out. If I told you that this head and shoulder pattern should be a reversal pattern, you should find out why should it be a reversal pattern. Or if I say that this head and shoulder pattern should be a continuation pattern, you should find out why should it be a continuation pattern. But don't worry, I will explain some of these things for us today, but I'm not going to cover all the topic today. So what I'm saying is that anytime you are predicting candle, or let me say predicting the next market trend. The first thing that you first to look for is the trend, or let me say the first thing that you should know about the chart in front of you is to look for the trend. Which trend? Is it downtrend or is it uptrend? Okay, is it downtrend? Is it a downtrend or is it an uptrend or is it moving sideways? So these are the things that you need to put into consideration. Like, you should have it in mind before you start predicting candles. Okay, so, and in some cases whereby you see bullish engulfing, and you expect next candle to be green, right? But what happened? Instead of green candle, the next one was red. So you start be wondering, why is it so? Why bullish engulfing pattern doesn't work here? It may not work at the moment. It may not work at the moment. It may not work here. Maybe in some cases whereby you see another bullish engulfing pattern, you just place call and you won. Okay, but one thing I want to let us know, that not all the time the market will always give you good entry. That is, not all the time you open the chart and you see and you expect the market to go up or go down immediately. Before you start trading, before you start even analyzing anything, first of all look at the chart. Make sure that 2 or 5 candles have already formed before you start predicting candle, so that for you to be in the mode of trading. Okay, but I'm not going in that area yet. But what I'm trying to say is that, not there's no specific definition rules that all these candlestick patterns, chart patterns, they are signed for reversal or continuation. Even the most the most important pattern, like head and shoulder pattern, most of us think that head and shoulder pattern is a trend reversal. Well, I can say to you that it's a trend reversal, but at the same time it's still a continuation. So there's no specific rule that the market will continue or the market will reverse whenever you see such pattern. Okay, then another thing, I said something in the group, in maybe the general group. I said, don't trade what you think, but trade what you see. A lot of us see that whenever we spot head and shoulder pattern like this, something like this, head and shoulder, let's say this one is the first shoulder, the head the head is about to form, and then we see something like this. Okay, this is the neckline, so we're expecting the market to create the second shoulder before we start selling. Okay, but that is not what we call by trading. If you do this, if you expect the market to go up, that you're expecting the market to go up to create the second shoulder, okay, this is now be our neckline, so let's sell. If you do that, if you do like this in trading, let me tell you, you will not stay profitable. That's why I say, never you trade what you think is going to happen, but trade what you see. Make sure that before you start predicting candles, you have already seen the pattern. The patterns has already formed, so that when you just enter the trade, immediately you enter the trade, you will know where you are. You will know the next direction. So don't think that the market will still go up here and create the second shoulder before it start moving down. It might not go up, even to the extent that this neckline, you think this level you draw here that think is a neckline, the market might still go more down and break it. So make sure that the patterns has already formed before you start predicting. Even a double top patterns, make sure that the pattern has already formed before you start predicting. Not that when you see the first top, the market pull back, then you see the market approach the second high, you are thinking the market will create the second top. Once you think the market will create the second top, the market might still go continue to the upside, even without even making any correction back to this level. It might still go up higher, because you are thinking the market will create, and you sell at this area, you are thinking the market will create a pullback just to create a double top. Make sure that before you start trading any of this pattern, you must see that the market has already formed double top before you start trading. That's why we always say enter the trade at the neckline after the breakout of the neckline and the pullback. Then another case is that whenever you are trading, don't if you are trading the pullback, don't expect that don't think that the market will always come to the don't think that the market will always come to pullback area before you start trading. Let's say, for instance, we have a bullish flag pattern, something like this, a bearish flag pattern. Then we have the market break the level. So when the market break the level, you know this is a bearish flag pattern. The market break the support level. Then you want to trade this pullback. You want to trade the pullback and expect that, okay, before the market could go more down, there must be a pullback to this level that is being broken out. And you want to trade the pullback. You predict the candle that the market, or you predict the market that the price will go back to this level, make some pullback to that level. So that's why I say, when you are doing such like this, you are thinking the market will go up. Don't ever think, even though there's a support level, most of the time the market will still go more down. And after going more down, there must be anytime the market will make a retracement, it might not even go back to this level. It might just make some retracement and continue a journey to the downside. So don't ever you think that the market will make a pullback to this level. So make sure that the pattern that's already formed, the pullback is here. So this is where you should not expecting the market to, or you are expecting to enter the trade, not here, not here. Don't say the market, don't think or don't force the market that the market will go up here. Okay, because we are not only the one that is trading. Millions of traders are trading at that time. Maybe by the time you are trying to buy, some are trying to sell. Okay, so you are getting it wrong. Now let's go to the main point. Now I'm going to open all the charts. So I want to show you how you can trade the chart pattern with confirmation using 5 minute expiry time and 1 minute candle. This is this is what uh, I have practiced. Let me say I have tested multiple times and it works. Okay. So the first thing that you need to look for is number one, the trend. The trend. Number two, if the trend is in a downside, look for the strongest pullback. Look for the strongest pullback. Then look for the continuation. Observe the market movement. If the market should pull back to this level again, or maybe higher above the previous high, then you should know that something is about to happen. Maybe by creating the head and shoulder pattern. So if the market create head and shoulder pattern like this, you should know that this is your left shoulder, this is your right shoulder. Then definitely you draw your neckline. Then make sure that the market make a pullback here before you start trading. So number one, first look at the trend. If the trend is in a downtrend, so let us look at this trend. Please always mute your mic anytime you are joining the meeting. Okay. So first look at the trend. Like what I'm seeing here, the trend is in a downtrend, is in a downside. You can see the trend is down. The trend is down. So this is a pullback. You know, the market is doing what here? The market is consolidating. So this is a pullback. I call this area a pullback. Okay. So the trend is down, or we can say the market started a downtrend from here, or we can choose it because both the overall trend and the minor trend is still down. Okay. Then the market make a pullback to this level, strong pullback, and then down again, up and down. Then when I see that the market could not able to create a lower low, the market start moving up. That means this is the time the market should start going up at the moment. So what are you going to do in this kind of situation? You draw your trend line, something like this, something like this. So if you look at this pattern, what does this pattern look like? How does this pattern look like? It look like a bullish reversal. Something like when we see a downtrend, pull back, down, pull back, down, then bullish reversal. Let me say just like head and shoulder pattern, a bullish reversal. Okay, so we call this a bullish reversal. So in this kind of situation, the market is now ready to go up. Okay, but I will show you how to spot this pattern. It is not when you see the market has already break this trend line before you start trading immediately. You have to wait for any confirmation, like a pullback. Let's say the market break it, then wait for a pullback. Then when the market pull back, you should know that this is the time you should start looking for candlestick patterns like hammer, bullish engulfing, pin bar, doji. This is the type of candle. A spirit up. These are the type of candle you should look for. That after the market make a pullback. Okay, so you can see that here the market did make a pullback. Oh, sure. Okay, let me use the trend line. Down. Please, if you don't understand what I'm doing, just ask me any question. Down again. Oh, come on. Okay, let me do it this way. Come on. Down again. Okay, then up. So, okay, let me change the width, the bold, so that you see the chart. Okay, so now we have drawn it now, and you can see that this pattern is head and shoulder pattern after this downtrend. Head and shoulder pattern. We can also see how the market break the trend line, break the neckline. Okay, you see that the market break the neckline. This is the breakout, and this is the pullback. After the pullback, what do we see? This is when you should start using all these candlestick patterns like bullish. What am I saying? Like hammer candlestick, like bullish engulfing, bearish engulfing, doji candlestick, spinning top. This is the right moment that you should start using the trend line. Sorry, you should start using the candlestick patterns. Okay, not when you see all those patterns, not when you see the candlestick pattern, you start using it or you decided to use it. The market might not be in a good condition that time. So it is better for you to see the pattern at after you see, make sure that the candlestick pattern form after observing the trend or seeing a correct chart pattern, something like this. If you look at this pattern, what does this pattern look like? A bullish reversal, bearish from bearish to bullish. If you observe that, if you note that, take note that uh, take note that or try to observe that the market will still go up this time, because after this downtrend, this is the pattern that formed, that decided that the buyer decided to start buying the market, or the presence of buyers is now available in the market. So now, if you want to trade like 5 minutes expiry time, it is after you see this confirmation. This is the confirmation, a hammer candlestick with a giant wick are the supportive trend lines. because after the breakout, the market make a pullback. So you might just be seeing these red candles. You will not know that this is the pullback, or you will not know that this is the pattern that formed that the market is pulling back. Okay, so the market, the price make a long week, giant long week. After seeing this long week, you should know that the market is now ready to go up this time. Then for the forex trader, you should able to uh let me say you should able to know when you should take your profit and when you should enter the trade. Let's say the width from here to here, the height. Let's say from the height from here to here. That means after you see the confirmation here, you enter the trade. Your stop loss should be below this previous low or below the week. Then you enter a buy trade. Then your take profit should be somewhere around here. I think it has already reached the take profit. So this is how you enter the trade using 5 minute expiry time. Okay, but I didn't see any opportunity here. Don't worry, I will show us some of the parents. And then okay, here you can see this one also. This one also is like a bearish continuation pattern: down, up, down, up, down, up, down, here and here. So after the market break the lower trend line, we see this confirmation. Is look at this candle, this pin bar. Look at this pin bar candle, this small pin bar candle. Okay, you can see the giant wick. So it's a sign of reversal, and that is when we see the formation of evening star pattern. And before you know, when you see, you can see that the market went down straight. So it is whenever you draw this pattern or whenever you identify this pattern, that is when all this candlestick pattern works. You can see most of them in the chart, like this candle. Why didn't you say that the next candle should be red or downtrend like this? But you see that after this small pin bar, the buyers still entered, and then we are seeing, we don't know what is really going on here. Okay, so it's not when you see all these candlestick patterns that you think that maybe it's going to be a reversal or maybe going to be a continuation. If you don't find out, or if you don't find out the trend or the chart pattern, okay, these are the reason why we lose trade mostly, because we always go with what people said, but we don't want to know, we don't want to find out on our own. So when you find out on your own, you should know what to do. You should know that this patterns is going up. Okay, I think yeah, the market is still consolidating. Okay, let me see the buyers will go up more than that. Okay, so this is the next chart. Here the trend is down. Here the trend is down, and here the market is up. See, the market is moving up. We can see from this down here, down, up, down. Okay, there's a momentum here. There's a level here. So we have with the pullback here, and after this uptrend, we have pullback, retracement, retracement, and you see that it creates a double top. Most of us we think after seeing this double top, let's go with sellers. You should wait for the market to break the neckline, then make some pullback. After seeing the pullback, the market should give us a signal that this is when you should enter the trade, not immediately, not immediate trade. Okay, so here You can see this is a bullish flag pattern. I think that was why the buyers entered. See, after this pullback here, after this pullback, we see a bullish engulfing, and that is why the buyers enter. Now the market is going down. So let's see what is going to happen next. Okay, let me do it this way. Uh, we go here. The problem of this analysis is that how can you identify them whenever you come across? How can you say this is a reversal pattern or this is a continuation pattern? That is the most problem now. But you have to stick with your analysis and your daily plan. Okay, let's say the market move up to this level, then make a downtrend. Okay, then up again, up. Now the market is going down. I think the market should go down, right? So let's see what is going to happen next. If the market will truly go down, let's say this is going to be our neckline. So let's see if it's going to be our neckline, whereby the market creates what we call double top. Okay, you can say this is double top. Though the last top is higher than the previous one, but it still look like double top. So what are we expecting in this kind of situation is the market to break the neckline, they make a pullback. So once you make a pullback, any candlestick pattern that we see here, that is when you should start entering your trade, going with sellers. But this time, don't trade anything. Don't say you want to place your trade. Don't say you want to place your trade. Don't say you want to go with buyers or you want to go with sellers. No, don't ever think of doing anything here. So let's see what's going to happen here. And if the market should make a pullback by creating head and shoulder pattern, something like this, okay, fine. That means we should expect to see what is going to be the outcome of the next neckline and next shoulder. Okay, if the market will really go up, or if the market should be a reversal pattern, something like reversal after this bullish trend, the market reverse to the downside after forming this pattern, or the market will go up. So we don't know yet. But for me, I think the market will go down. If the market should create this head and shoulder, create the second shoulder. Okay, but I cannot decide that the market should go up and create the second shoulder. That is not how to trade. What's going on here? Okay, you see, that's why I say the market will go up more and more. Okay, so here I'm expecting if the market will create this pattern, head and shoulder pattern, or the market will break the lower trend line, then make a pullback. After making a pullback, if we see any sign of reversal or any candlestick pattern, that is when we should enter a sell trade for 5 minute expiry time. Okay, using 1 minute candle. So let's see what's going to happen here. So before that, let's go to the next chart. Here the trend is up. Okay, the trend is up. Uptrend, pullback, up again. Let me tell you, if you practice this or even and often, if you practice this strategy often and often, be you'll be able to identify all this pattern. I have tested this multiple times, this strategy, and it worked for me very well. So it depends on the why is it okay. So how does this pattern look like? Head and shoulder pattern, right? Like inverse head and shoulder pattern. Like inverse head and shoulder pattern. This is uptrend. Then the market creates four shoulder, the head and the second shoulder. Then it looked like the market has break the upper, has break the neckline. Now the market make a pullback. So what pattern do you see here? This is inverted hammer, like all these candlestick pattern, inverted hammer. So what happened next? If you entered, if once you spot this inverted hammer, you can see that how many candles form after seeing this inverted hammer? One, two, three, four, five. Even though you enter a 5 minute expiry time, you will see that the market still go up. Even after making some retracement, I think the market will still go more up. Okay, but let's see. But the trend is too long. The market might make some retracement. I'm still believing what I'm saying. Okay, the market break the lower trend line, the lower neckline. So what do we expect to see is for the market to make a pullback to this level. So in that case, we are not buying or we are not calling the trade. Don't say you want to place call because you expect the market to make a pullback. That's why I say don't trade what you think. Don't trade what you expect. Trade what you see. Trade what the pattern you see. Don't trade what you expect the market to do. It might go up to form a retracement to this level. It might not go up, it might still go down. So don't trade what you see. Trade what you don't trade what you know. Trade what you see. So this is the next chart. Okay. Uh, okay. Down. Something like this. Okay. The market already make the move I'm expecting here. Now you see the market has made the pullback here. Let's see any candlestick pattern that will form here. Or let me say it's gonna maybe it move like this. Maybe something like this. Because we have some retracement here, some retracement, then make a pullback here. But let's see what's gonna happen here. If this is gonna be a pin bar or gonna be a doji candlestick, the market is still consolidating here. Or maybe it's gonna be um, shooting star or a pin bar. I think that was a shooting star candle. So I expect the sellers to go more down from that level. Okay, here I didn't see any opportunity here, but this market is still going more down. Opportunity, the market is still going down. Okay, if you look at this is downtrend. Step by step, analyze the chart step by step. Down. Why is it not weak? Pull back. Oh, I always forget. Down again. Pull back. Down. Down again. Up. Let's say the up should be somewhere here. So what do we see in this kind of situation is when we see the market break this neckline, break this neckline. So after the what happened here? Okay, the buyers has already stopped. Now the market is going more down. I think this one is going down. So the market is going up. The market. The bullish reversal. Okay. Let's say this is a bullish reversal from bearish to bullish. You see, after the breakout, what do you see next? The retracement. Okay. So don't ever think of, let's say it's going to be red or something like that. Most of the time, the market will just make touch, like all this bullish with lower rejection. The market might just make this lower rejection from the touch the lower trend line, the level with the lower rejection there before the market start moving up. Okay. So most of the time, the market will just use the same color or maybe use the opposite color, like red, for red candle to form here before it start moving up. So, but here, this is the after the breakout, this is the retracement, and after the retracement, this is what we are seeing here after the retracement. Hammer candlestick, hammer candlestick, and that is why we see the buyers start going up. I think okay, this one, two, three, four, five. Okay, this is the last. I think this is the last one. That is a 5 minute candle, a 5 minute expiry time. This one only lasts for a while. So we know that the time the market will go up continuously. The reason why, if you observe that what I say here, that I don't expect the market to go up here because the trend is exhausted. You see this long trend, the trend is too long. That's why I decided. That's why I know that the market is not going to go up. But I thought the market will still go up, or if the market will give me luck by forming the triple top. That's why I decided to go with buyers. But unfortunately, the trend is exhausted. The trend has ended, and the market start moving downward. Oh, come on! What's wrong with network? This one, the market is still going down. The market is still going down. If you look at this one also, this is downtrend, and after this downtrend, this is the pattern that formed that the market decided to make a reversal. Okay, the downtrend is strong. Look at this downtrend. The downtrend is strong. Even though this pattern looks like a continuation pattern, seller will not go down very well. Seller will not go down too far. Okay. maybe just from few minutes, like 5 minutes or 4 minutes before they decided to go to the opposite direction. Just same thing that happened here. Okay, because the trend is very strong. I hate this network problem. So I'm going to search for any other pattern that we see. Here we cannot say this is double top. Oh, come on. We cannot say this is double top. Let's say the market will reverse from this double top. We cannot decide it like that. That is not how to decide, or that is not how to trade. Don't conclude that this is going to be a double top. The market just want to give us two or more examples before I stop. I don't know why the network is giving me problem these days. Excuse me for a moment. Am I the only one facing this problem? What is all this nonsense? Oh, I just want to give us two or more examples. Or let me say one example before I stop. I don't know why the network is just. Oh, I think now the market is now reversing. Okay, okay, guys. I think we should stop here for today. I think we should stop here for today. So I think I'll find something to do about this network problem. Maybe I should change my location because maybe the location of where I'm staying is too. It's not good. It's not strong. So next week we continue from where we stop. Okay. Good night, everyone. Have a nice day.